How are we doing? I was wondering if
The
I were
old
muted.
countdown.
No.
Welcome back, everybody, to Ashram Hours. Second one of the season of the year. I think we're like 8% of the way through 2026. So, new year, new you. I had about
Is
a
that
week of new year, new you. And then the last 3 weeks have been like launch mode, just insanity. But I got back after it this morning. I decided, fuck the big picture. One foot in front of the other, hit the gym. Let's go. So I'm fired up today.
what are your resolutions?
Oh, I didn't have anything. It's all the same shit every year. I'm 38 now, so it's like do better at stuff. In particular,
Call your
focus on
mom.
things. Yeah, like basic stuff, which doesn't, you should still be specific, but things like sleep, routines, nutrition, physical activity. Because like dialing in for work is something I'm very good at. It's very easy for me. It comes naturally. It's like the balance around it that I need to resolve. So I'd say I did a pretty piss poor job of that this month. But hey, we launched. We went live. We put a new product into the market that's never existed, and that took a lot out of me. And I'm preaching the choir because I think you did about, was it 21 16-hour days in a row? The last GitHub PRs would come in at like 5 a.m. We'd be on the morning calls, like placing bets on whether you were going to be awake or not because you just been up all night coding.
Oh,
It's
man.
been insane. So I'll let you tell the audience how it's been. How have you been?
Yeah, it's not a good time for New Year's resolutions, It's like I want to orient with my family, doing a sort of arbitrage around holiday travel. And like, can we just pretend Christmas is on December 2nd or something? And it's easy. You can get there. A day is just a number.
Yeah.
Yeah.
Jesus
New Year,
will
New
forgive
You
you.
will be postponed.
Yes. Yeah. Now, like
Definitely.
literally as of today, though, I got back to it. I was like, fuck that. There's a certain point of like compounding returns that can go negative too. They say like, yeah, like you can eat a cheeseburger and it's fine. But if you eat one every day, like you could skip a workout, it's fine. But if you skip 3 weeks in a row, so I'm just reversing that now from like an Atomic Habits framework. For anyone who hasn't read that, if y'all want to just get on a horse and start riding into growth, read Atomic Habits. Cannot recommend that book enough. And I bet there's 100 great books out there, or 1,000. But Atomic Habits really changed my life in like 2020 during that bear market, 2019, 2020. It's so good.
I have seen that book on thousands of friends' coffee tables. Wait, I don't have thousands
Yeah.
of friends. You know what I'm saying?
Yeah. Many of
Acquaintances,
your
coffee
friends. Yeah.
tables.
No,
Yeah.
it's great. I've listened to the audiobook twice. I've bought and read most of the book over the years. Like it's one you can keep going back to, and it's really interesting. It's not this boring self-help like that's just barking at you about all the things to do for 400 pages where you're like, I don't know what to do. I found it quite interesting. Even just talking about marketing in a store and how like certain products will be paid for to be placed in front of your face when you walk in. Some other product sitting in Walmart in the back corner, they paid less to be placed there, or they paid more to be placed somewhere else. And it's all because of how human behavior works. Something like I want to watch less TV. If you're hooked on TV, then it's like, okay, instead of telling yourself, I'm not going to watch so much TV and trying to motivate and discipline yourself, just take the remote, place it in a drawer, put the batteries upstairs in another drawer. You can watch TV all you want, but when you go to do it, you have to go and get the remote and the batteries and put them together and sit and watch. And when you're done, you have to put them back. That setup will, significantly decrease the amount of time you watch TV because it's not like a remote sitting on the couch that's welcoming you every day. One little example from the book, I want to drink more water. Well, have 5 water bottles spread out throughout your house with fresh water. Like you will drink more water just naturally because of the habits and the friction. So setting up your life, putting a mat on the floor next to your desk, hey, things like that, subtle, and then just the whole math of like 1% compounding daily. It's really good, powerful,
Yeah.
because big change is kind of daunting, and it can be intimidating and overwhelming. You think like, oh, this year I'm going to do all these things. It's like, nah, today I'm just going to move an inch in the right direction. And tomorrow,
Kind of like launching an app where
yeah,
to say big change, and then you
that's
can get lost in the salt mines.
yes. And there was a good 2 weeks there where like people were just like, where's Sid? I haven't seen like, he hasn't responded to me. I'm like, I'm waiting to hear back. He's going to come up for air soon. And the good news is, um, I knew exactly where you were. You're just like in the depths of the code and just looking at the features and looking at the, bug squashing stuff. And um, we're getting a lot of great bug reports in the Discord, but the
Yeah.
overwhelming responses I'm hearing, especially from like the more devy type people, are like, this thing's smooth, like an incredible thing to launch out there, where it's not like this buggy beta that's annoying to use. Like, it works, and there's lots of little things, this calc or that or whatever, like, but you guys are crushing those week to week right now. So yeah, it really, like, bravo on the launch.
Thank you. Yeah, it didn't crash. We were seeing like upwards of 100 requests per second around some of these launches on the servers. I've been a part of quite a few DeFi launches, and I've never seen traffic like this. It felt good, and they were fine. There's something unique about launching a crypto app in the world of software development writ large. Let's say you work at Twitter, X, and you release Grok AI into the world, and like, oops, it's Mecha Hitler. Like, okay, we got to take that back to the woodshed and work on it. The worst
Yeah.
that can happen is it's embarrassing. Like damages your image. There are worse things that can happen, to be sure, but it's not like a DeFi app in the sense that if the server goes down, if it gets overheated and the website grinds to a halt, if transactions aren't what they're supposed to be, that affects money here and now.
Mhm.
There's a critical bar to get over, and there's no undo button. It's not like Grok AI where you can just like, that was a mistake, let's fix it. You can't make mistakes with a DeFi app. You can not have it polished, to be sure. You cannot have the quality of life of the mobile experience be exactly what you want it to be.
Mhm.
But there's definitely a line that you can't cross when you launch something. And it's not only the correctness of the code. Something that I care a lot about is, when it's live, it needs to be live. It needs to be fair. The code could be correct. The smart contract could be correct. But if people can't get their trades through, if there's a glitch in the system, like there was on, people are still talking about 1010, where Binance's servers like refuse to fill orders. That really
Yeah.
matters. That's not excusable.
That
So
costs a lot of
yeah,
money.
when I was heads down for 2 weeks, it was stuff like that. I just wanted to make sure that every transaction would land, that the UI would not, stop working for some people and leave them trapped.
Yeah.
And I'm really happy to see that. Yeah, nothing went wrong. That's great. Smooth launch. May they all
Nothing.
be safe.
Yeah, exactly. And we had some questions over the weekend about, what's the next launch? And we had some discussions about that internally over the past 2 weeks. And the main highlight here is, hey, it works. We're live. We have the four horsemen: Zcash, Bitcoin, ETH, Solana, which are the most liquid markets, kind of neutral markets that we could find to list and start with. Things that somebody somewhere is looking to accumulate, not necessarily like going too far out the risk curve or, into meme coin town just yet. Um, Maybe share with us a little bit about your thoughts. I've got my own. I talked a little bit in the
Yeah.
Discord on Sunday night. But like, what are your visions? You've talked about Tiffany's, Walmart. Like, maybe you want to get into that kind of stuff. Thought that was a really interesting point you made.
Technology has a way of making what came before it, redundant or obsolete. Like, who still uses a washboard? In this day and age in America, like, you have a washing machine to do that. You don't. You got to do your laundry, to be sure, but you don't need those old tools when a new thing shows up. The AVM, what Samsara is doing with its derivative that builds on a treasury, it makes MicroStrategy obsolete. You don't need these vehicles anymore. You don't need a traditional company with preferred stock and this whole whirligig, with everything going on there. It just does what strategy is doing with Bitcoin, and it does it seamlessly, correctly, transparently, with extra features that should have been there all along in these traditional vehicles, were it not for the fact that they're built on the wrong foundation. All of the Bitcoin can go into Samsara with a little bit of loss, on the transfer into CBDC.
Yeah,
All
Coinbase would love that.
Yeah, sure, sure, sure.
CBBTC would do well.
Yeah, and the only reason that we picked Coinbase as a vehicle is because it's what's there on Solana.
It's the
It's
most
good.
liquid. Yeah.
It's liquid. Yeah, yeah. It's a fine envelope for Bitcoin, but
Yeah.
the point is that this is the kind of like hesitant with this phrase, but it's the DAT killer. It's the digital asset treasury company killer. The growth of this is unbounded as is, and it's that 4 times over right now for ZEC, ETH, and Sol, and Bitcoin.
I actually had a
Where
call
yeah,
with a DAT company, and it was eye-opening because what they told me, they acknowledged that this DAT model is broken, and we were sitting around laughing about kind of the equity value of these companies that seems to implode after launch. The last year there was this. The model is broken in the sense that you raise private equity, like you sell some shares in a pre-sale off the market, and then you use that money raised to buy your initial assets, whether it's Bitcoin, Sol, whatever else. And then you announce, and the shares would rip higher, and all those people who bought in at a pre-sale, and there was some crazy stories. I mean, 100x on $1 million position, liquid, getting out, investing in it. But it shows in the chart, and then they just get diluted out. And then the question is, why would I hold that equity at all if it's supposed to represent the Bitcoin growth, the Sol growth, whatever?
yeah,
And that's where a lot of people are kind of turning around going, yeah, we got ahead of ourselves. Like, this equity is not very valuable. And so then the question is, what happens when it loses value, goes below NAV? Does the company sell some of their holdings to push up the price? And then you get that race to the bottom feeling. Anyways, I spoke to this DAT company 2 weeks ago and shared what we've got, and they're interested. And like, they're on chain on Solana looking to deploy their holdings. So it's not necessarily like this killer where it's like they did it this way and we've done it a different way. These DATCos are holding that asset, and they're looking for places to deploy it, because the takeaway from our conversation was the only way we're going to outperform, or the only way our equity is going to ever have any value, is if we can take all of these crypto assets and find yield opportunities, find growth opportunities, put them to work. And so that's sort of was the crux of our conversation, was like, hey, convert those into NAV token, and then you can go about whatever you were going to do through your borrows, whether that's an LP strategy, staking, whatever. And they're looking all over the place for just ways to stake. And so that was an interesting conversation that made me think these DATs can actually deploy into Samsara with the assets that they acquired. It's not one or the other. They're not sitting in a dormant wallet. And I'm sure much of it is, but the two companies I've spoken to have both been like, oh, we're looking for stuff to do. Like, we want to put this stuff somewhere. So that was an eye opener for me, because it felt like I'm picturing, I think in MicroStrategy's case, and that's why I was probably picturing that, is like, there's nothing to do with that Bitcoin. That Bitcoin is meant to sit there and grow. But when it comes to the more like DeFi DATs, or DATs, other L1s, they are looking to deploy, whether that's into ETH staking, Sol validators, or more exotic DeFi stuff.
What is crypto at the end of the day? Like, what's the idea? It's very simply, let's use an automatic algorithm instead of people. That's all it is. The birth of it was this thing called Bitcoin, which was a reaction against people imposing their ad hoc decision making on monetary policy. And it said, let's have this algorithmic thing that nobody owns and everybody owns. Nobody just turns into everybody. It's just an algorithm. It's not a company that's doing it. There's nobody issuing Bitcoin. That's all crypto is. Otherwise, it's just traditional companies, using a blockchain to conduct their daily business. Which, fine, you pick a database, any database. It doesn't really matter what you use as your tech stack for your centralized legacy company. Samsara is the cryptoification of reserves, of treasuries. And it does this in a way where there's nobody issuing the stock. I think one of the reasons why you see DAT-Cos is because they have the money printer for their own stock. What would it be for a DAT company to dismantle, and instead of printing their own stock, they just buy NavSol? It kind of seems like maybe they don't have the incentive, and that points to exactly the problem, because their incentive is to make money. Their incentive is to sell stock to other people, to buy it from them, so they get paid. They're not a public good, but Samsara is. And by being a public good, it's decentralized in the real sense that nobody controls it, which is to say everybody controls it. What it would look like for a DAT company to dissolve and use Samsara is what it looks like for a person to liquidate and use Bitcoin, which is you're just buying this decentralized anonymous asset that, again, nobody is issuing. A DAT company would be using Samsara so they can turn a buck themselves. They buy the NAV token and it's theirs, and they sell it when they feel like it, all the while growing this reserve treasury that belongs to everybody and nobody. Mm-hmm. It's like a neutral vehicle for anybody who thinks they're long on ETH, ZEC, Bitcoin, Sol, to like be your own DAT company. Self-sovereignty. That's what Bitcoin did for currency. So you don't have to ask anybody permission. If you believe in this, you can just use it. You can just use it. You can just buy it, transfer it, hold it, sell it, whatever. And Samsara, the AVM, is another inversion. It's the cryptoification, where rather than being a platform for somebody creating their own DAT company, it's that let's be the neutral foundation where anybody can allocate to a treasury. It's just one place that can collect literally everything. And I truly mean this, and that's not an exaggeration. If all of the Sol, if every single Sol token flowed into Samsara, would anything bad happen? Absolutely not. It would just raise the floor price. It would raise the token price. And for the purpose of people spending their Sol, which is a utility token, to conduct transactions on Solana, you can just borrow with zero interest. So Sol still remains liquid, and the treasury amasses. This is
I was tweeting that out this morning.
Yeah,
I woke up today to a nice floor rise on Sol, so my borrow capacity went from 400 to 410. I was sleeping, and I can have more Sol. And that's another angle that we talked about over the weekend that I think really landed for me when it, I had a few discussions last week that brought me to this idea that NavSol is a really valuable vehicle for somebody who's trading against Solana in particular. They say, you know, meme coins in particular, obviously a major use case on Solana, in the trenches on platforms like Trojan. I signed up last week, really like that terminal. And if you're in there, and I put a little soul in there just to mess around and test it out. And I was like, damn, this is addictive. You know, this is fun. This is fast. And why not, as opposed to say, okay, person A takes 100 soul and they rush off and they say, I'm going to trade meme coins, and they make a bunch of money. Okay, great. What usually happens after you make a lot of money? You get wrecked. You know, your risk goes out the window. You start thinking like house money. And this is a story as old as time. And I know this from years of trading and being around a lot of traders. Your biggest losses often come after your biggest wins. And that's if you're fortunate enough to have a trade plan and some edge in the market, and you can establish a few wins, a string of them. And so the reality is most people lose money out of the gates. And if in either case, operating from a position of nav soul has all kinds of benefits. And that's part of, you know, what people in our community, they know that from the get-go. They're like, okay, you know, nav soul gives you access to interest-free, liquidation-free Solana borrows. And if you make some money, you can compound it into more nav soul and borrow more, grows the pie, lifts the floor. Everybody who's running this strategy can borrow more. And if you lose, just say I took out 400 soul yesterday and I ran into the hottest launch and I got smoked. I woke up in the morning, didn't have a stop loss, whatever, and I'm now smoked. I got 98% drawdown, whatever, rugged. Well, when I woke up this morning, I could now borrow 410 soul. So if I had already borrowed the 400, if I woke up today wrecked, I would have been able to then go and borrow 10 more. I'm back on my feet. I still have my nav soul. And so it's almost like an insurance policy. In the worst case, an insurance policy. In the best case, a compounding savings account of sorts that just grows over time, and I can compound into that. Not to mention that added borrow capacity over time is a tax efficient event for me where I live. So there's all kinds of reasons why I think meeting people where they are on Solana with the activities that are already taking place, it makes for a really interesting initiative on our front. And that's something we'll be looking into and executing on in the next days, weeks, months. Because one of the challenges with Samsara is it does a lot. It does a lot, and it does it differently for different people. You know, if you're a holder, you might use it this way, and these are your benefits. If you're a trader, you might use it this way, and these are your benefits. If you're an advanced DeFi user, there's more opportunities still with regards to borrowing and LPing and getting your yield and compounding. Shout out to FG in the Discord. He shared a few good strategies on that. And then projects themselves have a whole series of benefits that you wouldn't necessarily go into all the trader and holder benefits. So it's really those four buckets. When you have a new primitive like this, you have to start thinking, okay, who's the audience? Which types of users are going to use this in which ways? And when you have a product like ours, there's a lot of answers to that. And so it's just really about like zeroing in on specifically who can use it and how. And there's a lot of stories to tell in that sense. And that's been the focus of the content that we're putting together right now, and the messaging and just the world tour that I've been doing on in person and calls and stuff like that.
Every mature economy resolves on they pick something to be their piggy bank in that economy. In the case of the United States, it's often real estate. Like you're a nuclear family, you buy some real estate, it's probably your biggest asset that you'll ever have. And what do you do with it? You let your equity grow, and you use your equity for credit. You take a line of credit off your home equity, and that's just what makes the economy run. You know, people just pull money out of their home when they need it as a nice loan. That's so common. It's a little hard to notice how critical it is to how the American economy functions. This is that for digital assets. The equivalent of having a home equity line of credit with your digital assets themselves, that you stick it in Samsara, you have principal protection, which you don't even really get with a home. And then you get this line of credit where, also unlike a home, they're never going to repo your NAV, and you're not going to pay any interest on it. That's the idea. It's this treasuryification, this reservification. You have assets that, you're either trading them or you're holding them. This is the holding, but it's also tradable in its own way. And there is a strata of the American economy that trades mortgages. I direct your
Mhm.
attention to The Big Short, not the ending, but
One of my
just the
favorite
fact
movies. Yeah,
that there
I
are,
probably watched that 30
trillions of
times.
dollars of paper moving around on this stuff.
Yeah.
There should be trillions of dollars moving around with these NAV tokens. NAV Sol is Sol. Anytime Sol moves 1%, so does NAV Sol. The billions of dollars a day in notional volume on Sol trading should bleed into NAV Sol also. There should be just as much volume on NAV Sol as Sol because it is a derivative of Sol. In fact, there should be more, because history has shown time and time again that derivatives see, at least an order of magnitude more volume than what's underneath them. Derivative, I mean, perpetual futures, they're a derivative. They see
I
all
was
the
going to
volume.
say, yeah, I was going to say like futures when you introduce leverage, options when you introduce, the various writing of options, buying, selling. I could see where they would balloon. You have $400 trillion in derivatives in the world. Um,
The
in our
bond
case,
market is
yeah,
a derivative.
not familiar with those, but yes, I mean I've heard of
A
them.
lot of money moves through those
Creative.
derivatives. But that's why
Yeah.
derivatives get created in the first place. It's because there's a trade that wants to happen, but it's difficult. And so a derivative gets created to facilitate that trade. That is that ingredient is there in Samsara. But yeah, go on, please.
No, yeah. I mean, what's happening right now is it's live, and so people are touching it, tasting it, testing it, and the calls that I'm on are so much easier to get to the end point where people are like, okay, interesting. So like, where do I go touch it? I'm like, well, go to our website. Most people I talk to either hold some Sol or Bitcoin, and they're curious, they're interested. Especially when you consider some of these market caps. Our largest right now is a NavSol at 1.39 mil. So really small and easy to play with, get into. And on that note, a big part of volume and growth
Mm-hmm.
is visibility and accessibility. And I know that you've just submitted some integration code to TitanDex, which is exciting. That's a team we've been chatting with. Shout out to Chris. He is a member of Monkey DAO in our local chapter. He's been putting on these fantastic gatherings and lunches, and I've been chatting with him. And so shout out to you. I know you've been super busy, and I've just been like hounding you for integration code. It's not an easy thing to do. It takes a few days. It's a whole new thing you got to figure out. You've submitted that. So we chatted with them this morning, and we're in the queue. I think somewhere in the order of probably about a month is what was estimated with regards to that. And now when somebody withdraws their NAV token from Samsara, they can take it over to, when that's set up, they'll be able to take it over to TitanDex and swap in and out of it, or vice versa. Ideally, having our liquidity for all these things showing up directly on chain, start getting integrations into things like Bird Eye, and then same over with Nirvana and the Ana tokens. So that's a really exciting development. As far as I'm concerned, that's probably one of my favorite things that's coming down the pike. And that's where the legend really gets to grow. And, one of the challenges right now is like, you tell somebody about Ana, say, it's one of the most liquid tokens on Solana, and they go check Bird Eye and they don't see it. They see the LP that you and I set up so that CoinGecko would talk to us, right? So visibility, fixing that funnel, working on that, hardening the on-chain presence, all things. And another minor thing on that note, while we're on the topic, is the NAV tokens show up in separate accounts, which is a really nice touch. Changed from Nirvana. You go look at Ana token, you see 99% sitting in one wallet, and it's like, if I didn't know the people who built this, and I didn't just have a 30-minute call with RT, I would say this looks suspicious, right? And so most people, they come across that, and it's a blocker for them. They say, oh, Like, oh, I heard this was cool, but 99% one wallet. And so that's part of the updates you're rolling out for Nirvana as well. So all these kinds of things just getting touched up on chain, and it just helps us tell the story without actually having to tell the story. You drive people to the app, to soul scan. They want to start digging in on chain, and what they're going to find in the near term is 10 times more interesting and attractive and accurate than what they might find today or last month.
Yeah.
So
the app right now is it's a one-stop shopping experience beta. It shows everything, have access to everything, but it's not optimized for the 3 different kinds of experiences that you would use this derivative for. Again, to analogize with real estate, there's 3 different kinds of people. There's the one who owns the real estate, the person, the entity, the family. There are agents, brokers, landlords that manage a portfolio of real estate, and then there's the financial infrastructure that trades real estate. And the same thing goes on with the NAV tokens. There's people that just hold them, use it as a service. There's people who want to manage their treasury, their portfolio, kind of a power user. And then there is just trading for the sake of trading. These traders aren't wanting to hold for the long term. They're just making the market move. And
catch a swing.
Yeah. To the first one, where this is going, we've even been talking to some credit card providers that can help with this. The idea that you use this as a savings account. It's not the app is not a trading terminal. You're not going there looking at price lines or things like that, intraday movements. But it's more like having your savings account with a Vanguard or something. You like Sol, you put your Sol in there. It's growing, it's earning yield, whatever. And the main feature is that you have an easy button for a line of credit. So whenever you want to spend some Sol to do something, imagine this seamlessly integrated with a browser wallet or something like that, where you're not carrying around loose Sol that's doing nothing. You just have your NAV Sol, and
A growth position.
when you need some Sol, bada bing, there's your line of credit. Take all you want. Yeah.
I almost had the perfect moment this morning. I was just tweeting about my borrow capacity. I haven't borrowed yet. And then I saw somebody in the library say, like, hey, that money line or that mother load money line, that the ML, the mother load on OR is like really high. Like it's going to get to 1,000. I was like, damn, I got to go check. And it was somebody already won it. So it was up to 777. And I was just like, that's usually when I would go and mine some more, when it's up on like 500 plus. And so I was literally like 2 clicks away. I was just going to go borrow, take that 400 Sol, rip over to the mines, throw like, a Sol per square and just try to catch that. But sadly, by the time I arrived, it was already at 10. So it had already triggered. But that was a
2
quick
clicks, man. That's 2 clicks.
Well, it was an hour late anyways. But the point is, like, that was the first thing I thought was like, not like, where's my Sol bag? It's all in NavSol now. But like, it was the idea of like, can I just tap borrow, go mine some ore, motherload hits, ideally when I'm mining, and then take the Sol that I get back and repay my debt, have a little bit of debt sitting there, but pretty soon, floor rising from fees, from growth, and that debt just gets wiped out, and now I've got some fresh ore. So that was one, probably fitting more into the advanced DeFi user basket, where you're just looking for opportunities on chain, and then when you find one, you tap borrow and you go do it. And what's unique about this that I think is still lost on some people is that anytime you access that kind of capital efficiency on chain, you're introducing interest, you're introducing liquidation risk. And I don't know about you guys, but when I get looped through any kind of systems, I get uncomfortable because there's a lot of bells and whistles. There's a lot of moving parts. And over time, margin calls, liquidation cascades, all these things can be very uncomfortable. When you loop through the NAV token to start that journey, you don't introduce any of that. And so anything you kind of do on top of that becomes a lot easier to manage. So I think we're going to see more and more of that in the coming weeks as people really start to dig into this and go like, damn, I could use this as part of this other strategy I'm already doing that loops through 2 other borrow lens and introduces 24% interest on this triple loop or whatever the case is, right?
Yeah. Yeah. So the 3 main pillars of improvements to the app right now include that, which is just, this is your asset, this is your savings account, and you've got credit. Yeah, I don't need to see every trade coming in every second. That's not my concern. I already have this. I don't come to this as a trader. I come to this as a user. And all the AVM with Samsara is a backend for treasury savings accounts. A streamlining of the app for that use case is going to be important to get that point across. The second pillar is the trading experience. One of the burdens of creating a brand new AMM is that you have to build all the infrastructure that goes with it. You can't piggyback on existing state of the art. So the integration that you mentioned with Solana aggregators like Titan, like Jupiter, that's in flight, and that's going to help people just buy and sell, not buy and hold this stuff. And on top of that, improvements to the trading experience of the app itself. Faster updates, candlesticks, easier price impact and slippage controls, things like that. Really improving it for the sake of quick, expeditious transaction landing, knowing what you're
and
buying.
Intuitive. Intuitive as well. So you arrive and you're like, I know exactly what's going on here. And I love the candlesticks. I actually forgot. I've seen the models, the mock-ups. They're looking fantastic. And that, again, that just lends it well. 2 lines to somebody who hasn't seen it before is probably like, oh, which one's which or what's going on here? But when you have a line that goes up and only to the side and locks in your credit capacity, and then you have one that's candlesticks, it's like, well, that's the price. Like it's instantly intuitive. So that's a nice update that you've already got built.
Yeah.
Just needs to
say it again. We're not
What's
there.
the third pillar? Yeah, I cut you off. What's the third pillar?
Just to double down on that. NavSol is Sol. It just is the underlying. So the volume that goes through Sol should also be going through NavSol. The trade is there. The only thing that needs to be done is the plumbing.
Plumbing and awareness. Yeah, plumbing and awareness.
Here come the ARB bots, and the trade is the trade. The third is, this is the point that we were elliptically talking about in the beginning of, what if you are an entity that wants to do what digital asset treasury companies do, for the sake of something that you yourself issue. For instance, a project that has a mature, highly liquid, highly capitalized token, an asset of their own, that could do for some treasuryifying. It's just to pick someone at random, Radium, for instance. The Ray token's traded a lot. It's very mature. It has a rational price. Is there going to be a DAT company, fronted by Tom Lee, picking up the Ray token? Not anytime soon, because there's a lot of red tape around these kinds of things.
Yep.
Here's Samsara. If you want to create a treasury out of your token, what better way to do it? So this is the third approach to using this service to be the decentralized digital asset treasury that you'd only find in the wonderful algorithmic world of crypto. You've proffered some very interesting strategies for how a project could approach this in a way that
You read my mind.
raises
Yeah.
all boats and doesn't dilute. Please,
This is
please,
not
this is your
scripted, but it's great
brainchild.
setup because that's where my mind was going. And I want to share one of the main attractions of this that I'm really excited. And we're literally just this morning got in my inbox the resource that I'll be using to kind of go out and tell this story. But buying and burning, the classic
Oh,
case
buying and
of
burning.
how can I get the token that represents our project to accrue value along with the growth of this project. And the reason that became such a problem is because people were investing in these things, whether that was in a pre-sale, a seed sale, and they were primarily buying token. And then the project was coming out, and in some cases being quite successful, and the token was not enjoying that same success. And I'm going to give one example of this that is not at all a knock on the team. I've met the team; they're great, and their product's fantastic. And they may have a lot more going on than I know today. But Brave token, I'm gonna pick on Brave browser. Like, a lot of people use it. What do they got? Like 100 million users or something. I don't know the exact numbers, but it's very big. And in crypto terms, that's massive. And the token, I feel bad. I haven't even checked it in the last month, but like the token historically, that's one case where people are like, man, like this Brave browser is huge, but what's going on with their token? Do they have revenues? Could they be buying it off the market and burning it? And eventually that math in theory always would work out that the token would rise in value substantially. And in reality, it's not having that effect, at least in the short term. And we're seeing things like Pump and Jupe that have large amounts of revenue or putting a large amount of their revenue into buying back their token. But that token has also a lot of supply and a lot of vested tokens and a lot of whatevers. And it's having trouble escaping the gravity. Okay. So how can we reinvent the buy and burn to amplify the impact that it has? Because on paper, I've always loved it. I'm like, teams that weren't doing that, I'm like, well, that token's like never going to attach to your growth. Buying and burning was a great way. Rollbit's another one I've talked about before that I think is doing it well. They have like an hourly bot that provably burns and buys on chain. And I think that's great. And it actually is kind of coming out the other side of a 2-year downtrend. So, I still have faith in this, but how can we amplify it? So with Samsara, the buy, mint, borrow, burn program is something we're going to be spinning up and promoting to teams that are already doing this or maybe thinking about doing this. And so let's take example A. You have $10,000 in revenue. You buy your token. You spend that $10,000. You lift $10,000 a bid in the market, and then you burn it. That's the end of the story. That is just where that stops. And maybe you do it again and again, but that's it. That's the standard buy and burn.
Bye bye,
And a lot of these,
$10,000.
yeah, 10 in, 10 out, done. Alternatively, you engage with your NAV token. We launch a NAV token. You put it out there. You buy $10,000 of your token. You mint $10,000 of your NAV token. You max borrow, which initially, let's call it $6,000 of your token back, and you burn that. Okay, so initially you have burnt less, but that other 4,000 is not in circulation. It's effectively off the market. It's locked up behind your NAV token, collateralized now against that borrow. Now, as that NAV token grows and the floor rises, your borrow capacity increases on your core holdings. You can borrow more, burn more, borrow more, and burn more. And as you have more revenue, you can buy, mint, borrow, burn again. And you build that position in NAV, always scraping out the latest borrows and burning them. Now, the meta that can evolve around that, and this is where it gets really powerful. Right away, you've already put 2 bids in the market with the same 10,000. So you've amplified the impact. The NAV tokens moved up, your tokens moved up. Now, if your community, because every token is sitting in somebody's wallet, chooses to convert their token into NAV token, what is the net impact on the scarcity of that token? It becomes more scarce because if just say 10, 20, or 40, or eventually 50% of the supply of this token converted into NAV, first of all, the NAV token is now sending. So there's this new bull market that has arrived and kind of taken place inside of this tokens economy, as well as now this team's position, their floor is ripping higher and they're borrowing and burning more and they're borrowing and burning more. And so this meta evolves that says, hey, the more NAV token we mint as community members, the scarcer our token becomes. You buy or they buy, you burn is kind of the messaging. It's like, your community comes in and rips into this NAV token, which for all the reasons we mentioned before is already a pretty attractive derivative to hold because of the asymmetry that it provides, as well as the access to interest-free, liquidation-free credit. But now you have not spent any more money as a team, any more revenue. You can keep adding to that with your buy and burn, but now you just keep burning more token. And so that's a really interesting amplification feature that is only possible with Samsara and has never been possible before. So, getting out there, you're going to hit the streets with that messaging and connecting with teams that are either already buying and burning and finding it very cumbersome and inefficient, or that are considering it but we're kind of on the fence about it. It's like, hey, you got some revenue, let's amplify the shit out of it, because this is the only vehicle that you can do that in.
What if I told you, Neo, that an airdrop would make the price go up?
Yeah.
So you're going to emit, you're going to airdrop, you're going to give away 1 billion units of some project token. And they just show up in people's wallets. What do? You sell it, or hold it, but you'll sell it. You're just diluting. What if instead of emitting those, you navify them, samsarify them, buy the nav token with it? So rather than emitting 1 million ray tokens, you just use that emission. I mean, you're still emitting them, but you're buying nav ray. Price goes up. The value of nav ray goes up from that. In the anticipation of nav ray going up, other people buy nav ray because they know that it's going to go up.
But pray tell, sir, what token do they need to buy nav ray?
Exactly.
And what dollars did they just bring to the ecosystem to get in front of that trade? Fresh dollars.
So you buy the ray to get exposure to the value of nav ray. It still is the emission. Money is getting into the user's pockets by virtue of nav ray going up, and then the earlier purchaser of nav ray can sell at profit. This doesn't break the pattern, but it adds something else, and that something else makes all the difference.
Additive instead of extractive.
Yep.
And
it turns an airdrop into a trade, and that's a good thing for markets.
Yeah. And that's actually not been on my short list. So that's another resource I want to put together. The fact is, it's a tool set. And so step one, when I speak to a new team that hasn't heard of it, is like, hey, this is what's going on. This is how it works. And if they stick with you through that explanation, then it's like, okay, cool. But what do we do with it? And then there's just this short list of things. The buy, mint, borrow, burn, what you mentioned, an additive airdrop versus an extractive one. Another piece is just converting treasury tokens into the NAV token. And so almost every team holds a significant amount of their supply in their treasury, at least in the early years, because like we say from the pie charts on these pitch decks, it's like, 10% is going to go to this and 20% is going to go to that, and 20% for marketing. And what's kind of missing on those, which is implied, is that those tokens are all set for slaughter. They're all ready to be sold, right? If I want to spend 10% of our token supply on marketing, I need to sell them to cash to pay these marketers or these KOLs or whoever is going to tell our story. And if you find somebody who's willing to accept your token as payment, you better believe they are looking to sell it as well. In most cases, I would say every case, there's not a whole lot of reason for these people who have bills to pay and a company to grow to accept your token without the intention to sell it. And so what's going into all of this token usage from the treasury perspective is selling. And it's mostly especially in the marketing area, with the end game of hoping to garner attention, right? Garner attention, drive users. The best thing to do that is green candles, right? Every time you see something pumping, you say, I'm going to go to CoinMarketCap, CoinGecko, and look that up. Oh, that's a cool product. Maybe I'll use it. And so green candle marketing is really at the core of a lot of what teams are setting out to achieve with these spends of their tokens. Alternatively, you could convert, let's say 5%. You take 5% of the tokens in your treasury and you just convert them into the NAV token. And maybe not all at once on day one when there's a sniper fee and everyone's rushing to get in, but maybe over a period of a month or 2 months, you say, we are going to DCA into a NAV token position and hold the NAV token in our treasury. And in doing so, you've invited everybody in your community to engage with that. and to also join you in this NAV token. And anyone who's watching the stream and understands how our app works, you know this NAV token starting at $1 is going to rise in value. The floor price is going to rise. It's just the way it's going to work. You generate a sort of green candle marketing rodeo, if you will, over a period of time. And if the 5% you converted is matched by your community and growth, then your borrow is maxed out at 5%. You didn't spend anything. You've achieved attention. You've had a fantastic marketing campaign over a period of 2 months. And now anything in excess of that 5% you're able to borrow out, you could airdrop to your community, airdrop it to your NAV token holders. Again, zero spend, zero cost other than fees. And then run a buy, mint, borrow, burn program on top of that in a separate wallet. And so that wallet, as your borrow grows, your credit grows, you're burning, you're driving scarcity. So there's this whole package that a team can engage with here. And that is the primary focus I've got as we head out into the wild here with this thing live.
Yeah. You don't have to sell the Ray. Sell the NAV Ray.
You're just converting it. Well, this is the thing. You're just converting. And that's a key detail here. That's like the only option you have with treasury tokens other than selling them to pay somebody or do something. It's the first time that you can say, oh, I'm actually just going to convert it and achieve a lot of those goals.
Yeah. The worry with airdropping is you give everything away for free, or things vest, and just like what you said, that always it plays out the same way. You get something for free, you'll sell it. But what derivatives do is they add another layer. Trade the derivative, not the underlying. You're not trading Ray. You're not selling Ray. You're holding that. What you're doing is you're trading NAV Ray. Sell that instead, and that preserves the value of the underlying by adding this layer. Think of the bond market. You lend money to the U.S. government and you get back a bond, and people are trading bonds all the live long day. Fed still has the dollars. You sell the bonds, you buy the bonds. That doesn't change the fact that the U.S. government has those dollars. There's this extra degree of freedom that a derivative creates. And that's what revamps this whole idea about project treasuries and emissions and airdrops and things like that, is put the raw asset that you care about in the basement of this cathedral and let people trade the derivative instead. It amplifies the liquidity and it amplifies the value, and it absorbs the supply shock quite nicely. And it kind of does the opposite of the supply shock because it creates more value with the derivative. It's going to be interesting to see this play out. And the reason we got on this tangent was this question about, okay, what's next? And I was like, well, there are three legs to the stool with this. Piggy bank, intraday high volume trading, treasury management, and optimizing the experience, optimizing the flow for all three of those is part and parcel to making this derivative take over the crypto space, and with a similar scope to how perpetual futures took over a couple years ago, and we've never looked back because everyone just prefers them. Mm-hmm. This isn't like a perpetual future; it's something else, but it is just as ripe for universal adoption because of the problems that it solves,
the properties it has. Yeah. And, for those handful that are excited and anxious, just remember, we've been live 15 days. And I want to point out a nice analogy here. And it's something I remind myself, because I have a very high demand that I put on myself to grow this thing, to get it to be there. And I want that on day 1 and I want that on day 15. But Uniswap, probably the most forked protocol in crypto, other than maybe Bitcoin. I think there's probably like 500 Bitcoins, but to some degree. But Uniswap, I think, they launched like November or October 2018. And nobody really cared or heard about them until summer 2020. I mean, I used them a little bit in the spring of 2020, very little bit. But I still remember my buddy talking about it. I was like, what? Uniswap? Like this weird, vague weird on-chain thing. I'd used like Ether Delta in 2017, and that was a sketchy DEX. It was very tricky and weird. Ether Delta. You remember Ether Delta?
Yeah, yeah.
It was probably
I
in my
used
very first
Shapeshift
year.
way back in the day. I don't think that was a
Shapeshift
DEX,
was the
right?
first thing that I signed up for, actually. Fox
Yeah.
something. I don't know. Anyways, like, it's easy to forget if you weren't around, or if you just were like, yeah, Uniswap, it's a thing. It's always been a thing. It spent like a year and a half, almost 2 years in relative obscurity, about a year and a half. And now it's just like, oh, everyone wants it. Everyone needs it. Everyone knows how to use it for the most part, or like, and so I just remind myself that big new ideas, great products, they do sometimes take time to grow and get out there. Um, and so, on certain days when I'm sitting there like, why isn't everyone here yet? I just remind myself of that, because we're also not like launching a fork of something where it's like instantly recognizable. Like, oh yes, there's finally this exact, version of a product I already know sitting on Solana that I can use. Everything's new, everything's different, everything's unique. And so the battle is uphill. It's raging on day after day, and I'm having a lot of really good conversations each week with various people who are like, "Can we have a follow up? This is really interesting. I'm not quite there. I don't quite get it, but like, or whatever the case." That's one I had yesterday. But everybody's interested in this, because more than ever now, everyone's really having a deep, hard thought about what is value. Who am I trusting to uphold the market of the asset that I'm trading? Uh, you know, how do you guys do interest-free credit? Like, who's the lender? These questions come up a lot, and you have to answer them hand to hand, one to one, door to door at the beginning, and then as it grows, people stop asking the questions. They say, "Yeah, give me my NAV token, please. I'd like to have my interest-free capital."
Yeah, they say stop asking like, who's issuing the Bitcoin again? Where's the
I don't even
customer
know,
support desk?
dude. I went to the
Uh,
Bitcoin Explorer late last year to find some old transactions, and I did not understand it. And I was like, because I've been on ETH and Sol for so long now that if somebody's like, "How does Bitcoin work?" I'm like, "Well, I could explain to my mom like roughly how mining works. It's computers solving puzzles and hashes and guessing games and lotteries, essentially." I could, I could explain that much. But if you really ask me the in-depth stuff, equivalent to like the math within the AVM or something, I'm like, no, I don't know.
oh
I couldn't
yeah, I
tell you.
just meant
I just know that it works.
on a high level, on a level of common sense. The questions you get, like, who's lending? And the
Yeah,
response is exactly.
exactly.
Nobody
Everyone and
is
nobody.
lending.
Everybody and nobody. Kind of like what you said with
It,
Bitcoin. Who controls the network?
yeah,
Everybody and
and
nobody.
yeah, yeah,
And because everybody's soul, in the case of NAV soul, is being lent out various ways, they all get paid in the form of direct fee payments to the floor, which is everybody's bottom line. So it's a really smooth and kind of like upside down or like inverse yield, where I'm thinking in terms of yield. So if my floor value of my soul, NAV soul, goes up 275% this year, that's my yield. That's how I'm thinking about it, because when it comes time for me to cash in or withdraw or borrow, um, that's the credit limit that I get. And the same is true for Nirvana, right? On a token, was it like 370, 368, 268% floor growth last year? That's not a bad yield. Now, of course, only a dollar buyer bought that, but what can that floor growth look like this year? And that's really how I'm reframing it in my mind, is like, this is my yield. This is the amount the protocol enables me with my position to extract for things like rent, mortgage, whatever, groceries.
yeah.
And
Nirvana.
extract is not the right word, because it kind of suggests that someone else lost something. In this case, it's all very much PVE. It is simply the protocol's floor value that you can draw from, and it doesn't affect anybody else's bottom line. That's a unique
Yeah.
property.
When an equation is the counterparty, it's not extraction, because there's not a person to gain from it. Like, the Bitcoin protocol is not extracting when it does its thing, processes blocks and stuff like that.
Yeah.
Extraction always requires, two people that are trying to get one up on each other. But algorithms are not selfish. They're not self-interested. So yeah, this talk about an inversion, we've used that word several times. This inverts what a DAT company is, because now you don't have a company that is deciding to issue 1 billion shares of preferred stock. It's just a protocol that does it according to a rule. Similarly, and be happy to end it with this, that nirvana and now the generalization of nirvana with samsara, they invert the idea of a centralized reserve, like a federal reserve, um, where typically you have a centralized reserve and you and I lend money to it. We lend the dollars to the government and get back a bond in exchange, and the bond earns interest, and hopefully the government's good for it. This is the opposite. In the traditional case, you own the government's debt. With nirvana and samsara, and this is why nirvana can be the reserve asset for the world. It's not us holding its debt, it's holding ours. It's a perfect Uno reverse card of this pattern. And this is what crypto does. It's a reversal of the traditional way. What if you replaced a human committee with an automatic process? Samsara and nirvana, they're the ones owning the debt. The free market issues bonds to them. The interesting thing that happens is, in order for it to buy our debt, you have to put money into it, which increases its capacity to lend more. It's a virtuous cycle. You keep talking about how the floor rose overnight, and that increased your borrow capacity. That's because it increased samsara's lending capacity. More demand to take on this debt increases the credit capital of a protocol. And now you have liftoff. Away you go. Mm-hmm. This is the Federal Reserve of Sol. It is the Federal Reserve of ETH. And it does it by turning things around. Rather than you and I lending the money, the protocol lends the money and buys the debt, and that's what makes the protocol itself grow in its capacity to buy more debt. So you take the $1 trillion bond market and you just turn it around. So now the $1 trillion are inside a protocol rather than in the hands of paper holders. That's where we go from here.
The vision. Vision and messaging are really important here as we get through this early phase of growth. So anyone in the Discord, all the community members, you're watching this, you're listening. If you have any questions, if you're talking to people and you're not quite sure how to answer a question, they have like all that stuff, just hit us up in the Discord. There's a lot of very eager beavers in the Discord, eager to share and tell and show. If you didn't catch each one of our episodes or whatever the case may be, that's where we capture all of our resources. And that's where we'll continue to keep everything updated. So we'll be live every other week right here on Ashram Hours, likely some guests coming on in the near future as we ramp up into mid Q1. It's already February next week. Mm-hmm. It's wild. And in 8%. The meantime, yeah. And as Sid mentioned here, the focus is on hardening the app, optimizing it for various flows or users. So you'll see a lot of changes coming to the app over the coming little weeks as well. And there are questions about the Nirvana updates. So I'll just answer them right now. We've already spoken about it. Questions of like when, why, and what. And the idea is like, let's get this app hardened and set up for success and stable. And then you'll be shifting your focus back to the anniversary report from December 17th, where, we can expect to see all those updates go live with a fresh audit and everything just coming out and being hunky-dory. Very exciting.
Yeah.
Nirvana V3 coming up.
Really?
Yeah. So That's all for today, guys. We're at the hour and 15-minute mark. I think that's a healthy dose of our faces for 2 weeks. And look forward to seeing you all around in the Discord and whatnot. Until next time, have a wonderful, safe, happy winter. And if you're in a summery palm tree area, God bless you.
The grass is actually greener over there.
We have snow outside, yeah.
All right.
All right.
Thank you all.